Hello everyone, Theunis Kruger again. We have a lot of webinars, so it feels like I'm saying this every now and then. Right guys, live analysis and questions and answers. This is a special one today, but before we start, let's just check if you guys can hear me and see me. There's a couple of guys attending. Theunis, Darwin, can you hear me? Can you see me? From my side, everything looks fine. Ahmad says yes, you can hear me and see me. Fine. Somebody else, Yuan, Karabu, Millie, Tony, and anybody else hear me and see me? Tony's got his hand up. Right, Tony, I can see your hand up here. Do you want to ask something? Can you see me? Perhaps that's your way of saying that you can see me. Right. Ah, no, somebody else. Another Ahmad. Right. Also says you can see me. Right. I'm assuming, guys, that you can hear me and you can see me. If there's any issues, please just raise it in the question section. Then I'll, when I see it, I'll look after it. Karaba said, yeah, okay, that's right. So you can always see me. Right, guys, today's a special session for me. I want to use today's session as a reference of what I call the 1 minute exercise. There's a couple of exercises when somebody comes to me and he is not able to make a net profit over a series of trades as a trader. It usually means something is wrong with his basics. He doesn't have his basics in place. Basics, very simple. Before I move on, please, guys, if you've got any questions, please write down this this email and just email me. I'm quite busy. We're busy moving house, so I've got some leave days in this week and the next week. So please just be patient. I'll get back to you, even if it's just after a couple of days. But if you've got any questions, contact me. I'm looking for two types of people. The first is guys that want to trade themselves, that want to become full-time traders, what I call poets of the market. If you've got a passion for something, for a language, you become a poet or a writer. And then other guys who wants to build an extra income, right? They still need to know the basics of the language of the market, to know what the people are doing. But for them, there's Forex Time Invest. You can build a portfolio of guys that that are poets of the market that can, that can trade. But for them, they also need to be trained how to check, if a guy is a good trader. Has he got a good foundation? Does he know the language of the market? Is he looking for an early stage of the next trend? Does he respect the structure of the market? Does he take a calculated risk? And then lastly, does he manage that risk well? That makes it possible for him to make a net profit over a series of trades and not blow his account very, very easily. All right. So if you've got that, let's go on. Like I said, the first thing I let them do is take all the indicators off and just look on a line chart to see that structure, to get used to the structure, to get a healthy respect for the structure. All right. And part of that exercises, once they can do that, once they can see that, is we actually go onto a 1 minute chart, and then we do exercise there. We try and stay, or let me try and stay, we stay in the ebb and flow of the market. Just a word of warning, I'm not saying you trade on a live account. To trade on the 1 minute, 5 minutes, guys, lower time frames, lots of noise. So you have to have a very, very stable mental framework, practiced a lot to be able to make a net profit without undue stress and mental pressure to make a net profit over a series of trades on the with a live account on the 1 minute and the 5 minutes. What we're going to use the 1 minute now is for a practice. So you have to be on a demo account, and we are going to see that ebb and flow of the market. Because I'm just going to focus on that today, no other stuff. What I've done is I have actually made two screens here. I've chosen two currency pairs. We're going to search until we find at least two good places to trade, early stages of a next trend. That is fundamental, what fundamental analysis is all about. We study these charts, the price on the chart, but why? So we can identify early stage of a next trend and take a calculated risk there and then manage the risk. Right, I can in fact see one happening here before my eyes. So let's see. I'm going to jump to this one quick. We've got an uptrend here, guys. If you don't know what I'm talking about, please log on to your FXTM profile. Go to education, left-hand bottom corner, and there you will be able to see recorded webinars, and then you can check foundation of online trading. Guys, what I see here is an uptrend on the 1 minute, the Euro USD uptrend, higher tops, higher bottoms, and it almost looked like it was going to make a lower bottom there if it came down, but it's not. In fact, it's just made a higher top there. So I'm going to jump back. We'll see what happens on the other one. Right. The purpose of this exercise today is to identify early stages of an next trend. I want to show you how simple it is now. Yeah, how simple it is to trade effectively according to the definition of technical analysis. Please just consider that I didn't say easy. I said simple. The language itself is not very complex. It's uptrends, downtrends, and ranging markets. But it's not easy because we tend to make it difficult. We tend to clutter it with a lot of things. What we're looking at here is just a normal candle chart. We see the rhythm of the market. It's easier to see when you put it on line chart. Higher tops, higher tops, higher bottom. This is an uptrend. Downtrend is just the opposite, right? So if you keep it simple, we do need the candles to see the emotions of the market as well, because that shows us where to enter. But what we're looking for is we're looking for a structural change. Higher tops, higher bottoms. It almost turned around there. I'm going to use that as an example. If that didn't go up there, if it went down and it got past that point, there was a higher top, a higher bottom. Not looking at the individual candles, but the flow here, the flow of the market. Very easy to see that if you easier to see the structure if you go to line chart, but you can't trade there. We need the emotions, we need the candles, right? So if it went down there and it went past that point, then I would have used my guidelines and I would have entered there, put my stop loss there at the previous, at the lower top there, structural change, higher tops, higher bottoms, a lower top there. If it goes past there even 1 pip, then it's a lower bottom. I don't know how far it's going to go. You're never going to know. That's not the point. We're not predicting the price. The price is to take a calculated risk there and let the structure of the market flow. Sometimes we have to immediately protect our account if the structure changes again, but if it then continues to make a lower top, then a lower bottom, lower tops, lower bottoms, then we have a chance to make profit there. We have a high probability risk management or money management. Two are very close together. We take partial profits at 161 level. Another part for the training purposes, we usually keep that at 50%, 25% at 261.8, and then the 25% there, or you can leave the take profit out, and when the structure changes again, you can take the rest of the profit. Right, so we're going to see today live if we can catch a couple of them. At the 1 minute, you can see that ebb and flow of the market so beautifully. There is a lot of noise, so you get stopped out many times there with the noise or noisiness. For instance, let's look at this one. There was a higher tops, higher bottoms. It made a lower top there. There it gave you a good signal, and it engaged, and immediately you had to protect your account. Good trade there. So over a series of trades, we're looking to make a net profit, not every single one. A lot of guys get confused with what they call reverse trading or correctional wave trading, right? What that simply means, just waiting to see if something develops here while I'm giving this introduction. That's for guys that they don't wait for the structure to change. They wait just for a pullback. They trade those pullbacks. There's a number of ways you can call that type of trading. That's trading against the trend. What we're looking for is a structural early stage of a next trend. Definitely not the same thing, guys. Definitely not. Very high risk to trade these correctional waves. you have to be, I don't know, very, very difficult to make a net profit over a series of trades. Right, I see some movement here. One of the reasons I like the recorded webinars is that if you're new and I'm talking too fast, there's too many things you don't understand. Then when you look at the recording, you can email me if you want the recording. Then you can always watch it again slower. Stop and start, make notes or whatever. I've always got limited time with the Skype sessions and the Zoom groups. There's limited time, but if I refer to a webinar, very good webinar, like today's, where we're going to do this, the whole session, we're going to do this 1 minute. We're going to look for 1 minute trades. Then the guys can, they can do it at their own time. Okay, word of warning to the guys that like the adrenaline rush of trading. 90 to 95% of the time, guys, you are waiting. You're first waiting for an early stage of a next trend. Then when you get an early stage of a next trend, we're gonna spot. I believe we're gonna spot a few now. Then you wait for the market to trigger it. Then once the market has triggered it, then you wait for the market either to the structure to continue, so you take partial profits, or you wait for the market structure to change and you protect your account, and then you wait again. So there's a lot of waiting. Right. Luckily, what we can do, if you trade the higher time frames in between, you can shouldn't sit and stare at the screen the whole time. The only reason why we're gonna be stare at the screen today is it's 1 minute. So if I take a trade, I have to check every 2 or 3 candles. That's every 2 or 3 minutes. So that makes it easy to demonstrate stuff, to stay in the ebb and flow of the market. But if you're trading 5 minutes, 15 minutes, 30 minutes, every 2 to 3 candles is going to be longer. You have time to do other things. You can read. You can even schedule time to practice. Put it on line chart. Go to old charts. Stay in the ebb and the flow of the market. Right. Let's see what develops here. Is there any questions so far? I think the two is very correlated. Yeah, they're moving the same. So I think I'm gonna try and open another one here. That's the reason why I've got two. Ah, guys, we missed one there. There was a downtrend. You can see there downtrend. Market went up. It couldn't go lower. There's a higher top, and there was a possible trade for us. Right. But we missed that one. Very, very important thing. It's very disrespectful to the market if you miss the trade to jump in late. So what you're doing, you are messing with your business. You're messing with the numbers, the statistics. You're making it difficult for yourself to make a net profit over a series of trades. If we miss the early stage, then it's too late. Early stage for me is always the first two impulse waves. So you can see here when this changed, this was still a corrective wave of the previous uptrend. It tried to go higher. There was couldn't make a higher top there. It was a lower top. There's my first impulse wave. A pullback. There's my second impulse wave. A pullback or a correctional wave. Then an impulse wave, correctional wave, and the reverse happened there. There was also a good entry, but yeah, the market engaged you and you had to protect your account. The 1 minute, a lot of noise. Right. So that was just an example of that's the type of stuff we are looking for. What I meant is, so I'm looking for the first to enter in the first, and at the latest the second impulse wave, because on average there's about 4 impulse waves on average, sometimes more, sometimes less. But if I enter in the first or the second impulse wave, this would have been the first one. So you've got your correction wave, a pullback. That's your first impulse wave, and it's gone way up now. If it made a nice pullback somewhere here, I would have looked perhaps at entering there as well, but the market just shot up there. Here we've got a good one brewing. If the market tries to go up and it fails, then we can anticipate the possible early stage of a next trend here. So it makes a nice pullback. It cannot go higher than that one and turns around. Then we are going to see an early stage of the next trend developing. It's not fully developed yet, it's still busy going up. Especially in the 1 minute, I like a decent pullback. That was not a very good example. It's very, very close together. Difficult to do when you're trading it live. This one is developing at least one pullback there. Like I said, that one is a bit too far already. So we've got one here. I'm going to look for another one. I'm going to put another pair on here. Okay, let's see. No, they're also very looking the same structure. Let's look for something else. Haha. Let's see. I see some movement here. Can you guys see higher tops, higher bottoms? A break. This is an extended correction wave. It's not a first impulse wave. This is part of the up structure. Still going down. Made a lower bottom, yes, but it's only half of a early stage of a next trend. So a correction wave there, extended correction wave, and now we're waiting to see if it goes up and past that. It's just the uptrend connect or continuing. But if it turns around now and continues past that point, we've got our lower top and then our lower bottom, and I will enter there with a calculated risk. We are definitely I keep the lots as low as possible. This is an exercise. We don't want extra mental pressure. The idea with this exercise is to practice the structure of the market, how to enter, how to see the structure of the market. The calculated risk is going to be our lowest lot size, where we can take partial profits, and then how to manage that risk. That's the 3 basic pillars of trading. You get that right? Okay, what do we see here? Up, down, bit of a spike there. Let's take this one, guys. Not a very good pullback, not for the 1 minute. So I'm going to leave it. As you can see, that one is a little bit more defined. I'm going to leave that one. I'm going to take this one. I have to be fast there. Okay, 0.04. There I'm putting my sell stop, and I'm bringing it in. All right, so at the right spot there. So if the market goes, there I've got my lower top. If it goes past that point, then even just 1 pip, then structurally wise, there's a lower bottom as well. And then I'm willing to take the risk. That's what we do. We don't predict. We don't know what's going to happen. We take the calculated risk and we let the market structure play out. This is then the early stage of a downtrend, and a good trade would mean that I let it run. So as long as this stays a downtrend after I'm engaged, then I will take my partial profit, and you'll see how far the market runs. But if it doesn't engage, then it goes up again, then I just get out. If it engages me and immediately pulls up and takes me out there, then it's also a good trade. I respected the structure, I took a calculated risk, and I manage that risk. That's what we do. That's what successful traders do. We're engaged, guys. I immediately put my stop loss there. I put my take profit there. And now if the market touches that point, then I will take partial profit. Right. The only way I can make this a bad trade at this stage is either to move my stop loss, or to take, to get out early, or to not take my profit there. Then it immediately becomes a bad trade. I don't like bad trades. Bad trades is the road to not making a net profit over a series of trades. We have to let this go. The market has spoken. Structurally, we see uptrend, early stage of a downtrend. You can move fast. I'm going to take partial profit here, modify, and 0.02. If the market touches that point, I'm going to take partial profit. Only half of our position, 50%, not a whole lot. Sometimes the market is very generous, sometimes not. If the market wants to be generous, we need to allow it to be generous. We need those profits to make a net profit over a series of trades. We cannot afford to not take the profit if the market wants to be generous. That was one of the big issues that that prevented me from making a net profit in an early stage, or the net profit over a series of trades. I was always leaving it open, and the mental stress is heavy, and then I wanted as much profit as possible from everyone without managing my risk. Taking partial profit here means we are still respecting the structure, but we are managing the risk as well. Very, very, very important, guys. We don't know what's going to happen. When you trade full time, then there's a saying, yeah, we can take that. We've got half of our profit off. If the trade turns around now, the structure just zooms, or the price zooms up and takes me out there now, then I've only got 20% of my original risk left on this trade. This makes it mentally much, much easier to just let the structure continue. As long as it makes lower tops and lower bottoms, guys, we stay in this trade, right? Many times when you do this exercise, the market touches us, immediately closes us out. Still a good trade. You can go and celebrate. Still a good trade, right? Good trades enables you to make a net profit over a series of trades. Bad trades, when you interfere with the structure, when you don't respect it, when you bring your stop loss down, you get taken out too quickly and the market continues and miss out on all that profit. That's where the problem lies, right? So while we're waiting here, we're waiting again. Just good news. Some guys tell me that I can see it's reflecting here. There, it's also gone. You can see if we entered that one, but I didn't like that pullback so much, then we would already be past the same as this one. But I think let's focus. We've got a one open. Let's focus on this one. While we're waiting to see what the market does, I look at some of the questions. Just okay. Somebody says they can't hear me. That's not good. Okay, from my side, the audio seems to be fine. The microphone is working. Karaba, can you hear me now? I'm going to put up my volume a little bit here, but I think that's only my volume. That's not the microphone. All right. Anybody else hear me clearly? On my side, everything is on, everything is working. Charles says you can hear me. Right. Okay, let's just see. We've got our corrective wave there. We've got a lower top there. We entered there. It's busy with the impulse wave. It's busy with making a lower top there. If it turns around, we do nothing. It's just a corrective wave. Even if the corrective wave just shoots up and takes us out, that's all right. That's a good trade. So structurally, we are only allowed to get out of this trade. Let's say, for instance, it does turn around there and it goes there and it continues down and it then continues up. We still leave it. But if it cannot go down, doesn't make a lower bottom. Remember, a lower a downtrend is lower tops and lower bottoms, and it then continues up, then I move my stop loss to that point there. There, I'll move my stop loss from there to there. We take what the market has given us. The market speaks uptrends and downtrends. It's a structure that you can always see. You don't have to guess. That's the one thing that makes it very difficult to make a net profit over a series of trades, is if you're trying to guess what the price is going to do. You don't have to guess, guys. I've got good news. You can see what the price is doing. You can see what the market is doing. Trying to guess is a very dangerous game. In fact, Mark Douglas in the book Trading in the Zone says that the moment a trader thinks he knows what the market is going to do, he's in trouble already. Then neurologically in his brain, then what's happening is that because he thinks he knows what's going to happen. Sorry, I just want to get that structure out there. Yeah, nice. The moment you think you know what's going to happen, even though it is not the truth, your brain starts almost like hiding information from you. It starts optimizing. Our brains are amazing instruments, quantum computers working at the speed of incredible speeds, right? So it starts optimizing and almost like hiding information from you, and you see there, you believe what you see, and that's almost what you see. That's why many times when a guy takes a trade and afterwards he thinks, what the heck, what was I thinking when I took that trade? That's because he believed something there, and his brain started optimizing, and that's what he saw, right? So it's as simple as that. So what we've got now happening, this is not very big candles here, but it's definitely a lower top, a lower bottom, a lower top, and the moment it goes past that point, even a little bit, then it's a lower bottom again. There it goes past, right? So we wait, guys. Now is that 90%, 95% waiting game. So if this was let's say a 5-minute or a 15-minute, every 2 or 3 candles, 5-minute means every 10 to 15 minutes, I have to check on the specific chart just to see if the structure have not changed. If it's a 15-minute, it's every half an hour to 3/4 of an hour. If it's in 30 minutes, then it's obviously every half an hour, every hour, or every hour and a half. So it gives you more time to do stuff in between. So that's one of the most useful things of understanding the structure of the market. If there's a day where you don't, you have to go and do other stuff, then you can simply do what I do. You trade. Wait. It's approaching there. So there we're going to take 25%. Man, market is moving. Okay, 25%, guys. Boom. Klar. Right. So now I've got a net profit in my pocket. Doesn't matter if the market turns around or not. So we caught that early stage of a downtrend. And what I was saying, let's leave this one. Let's take out this profit and take it when the market structure changes. In the beginning, when you're practicing, you're not sure yet. I tell the guys, leave the take profit there. Then you don't have to guess. You don't have to wonder. But as you progress, as you understand the structure of the market, can then obviously you can optimize by taking that take profit away and then letting the market run. But when the structure changes again, then we bring our stop loss down, just as I demonstrated. I see there's a couple of questions that's piling up here. Danish says, can we win a trade without reading Forex news? Danish, I love that question. Yes, 110 times yes. I'm going to tell you a little story. There's a guy, Bill Williams. You will recognize him if you've played around or if you've gotten to know your indicators. There's a whole section of indicators dedicated to Mr. Bill Williams. Very awesome trader. He's a very clever guy. I think he was a psychiatrist that started trading and obviously became very good. He did an experiment. He was wondering what in his trading desk, his trading firm, he taught the guys that they're not allowed to trade the slower time frames, the lower time frames, just before news. So they look at the structure of the market, but they know that sometimes in the news times, then there's big whipsaws and stuff. So he made an experiment. He took 3 of his guys and he says, right, for 6 months now, 3 months, 6 months, I'm not sure. You are not going to see the news. You're only going to look. I don't care what time frame you trade, from the 1 minute to the 4 hours a daily. You're not going to see what the news is. You're just going to focus on the structure of the market, as we did here, right? And he tested it. So after 3 months, 6 months, I'm not sure, he checked what was the results of his traders that were not allowed to trade before news, just as a safeguard, and the guys that could, they didn't even know when the news happens. And the guys that didn't see the news, that wasn't influenced by anything else in the price, the structure, did 30% better than the other guys. So that was enough for him. And then he took the news away. You were allowed to see the news after the fact. But while you're trading, you simply look at the structure of the market. What he found was very interesting, Danish, and that is that even though you know where the news comes out and there's big whipsaws, many times if there's a whipsaw, you just get stopped out on that one trade. You And if you do it correctly, it means it's just you protect your account there. It might even jump a little bit past it, but if you trade markets with a lot of liquidity, like the majors, then you don't have a problem with gaps and stuff, right? But what happens very, very often is the market structure changes as the big guys that get the news, they pay for the news, they get it before us start taking positions, and then the market just continues in that direction. And then obviously you get some nice bonuses. So the market very quickly moves in your direction, and that more than made up for the fact that now and then there was a whipsaw where they were taken out, and that's why he decided to take the news away. That was an article I read anyway. I don't know if he might change his mind later. That's just for your information. So I decided the same thing. I really care about the news very much. Sometimes I forget about the news and I trade through it, and then afterwards I see, oh, there's major news. So obviously when there is major news and whipsaws, I see it, but because I've got a solid foundation, every single trade I take is a calculated risk and I manage that risk. So if the structure changes, normally the market reaches my first take profit where my risk is reduced very, very much. There's a high probability of that reaching it, and then my risk is low anyway. So, right, let's see some other questions. How did you set the Fibonacci? Karaba says, how did you set the Fibonacci retracement like that? Guys, I'm using the Fibonacci tool, the Fibonacci retracement tool, as a guideline. I'm not trading with the retracements. They would normally be in here. I'm going to very quickly show you because we've got time. The market is still running there. I've taken my first and my second take profit. So we've got definitely structurally wise a downtrend there, lower tops, lower bottoms, and it's busy with a corrective wave. The only place where I would look at it again now is if it goes up, makes its corrective wave, cannot continue down, and then starts turning around. Then I will move my stop loss there, and I'll put, because this is a nice little downtrend, I'm going to put another early stage of an next trend for a long there. But currently it's just busy with a correctional wave. That's it. Might even be an extended correctional wave, but I refuse to make this a bad trade by moving my stop loss. If the market wants to be generous, I will allow it. I cannot afford not to. Right, so let's see. Let me get rid of that. Right. Initially, when you open or when you get the Fibo tool, then it is going to look like this. Please, we don't trade with it, guys. It's just a guideline to help us with our money management. Right. Then it looks like this. What you do is you right click, you select it. That's the selection line. That's how it's going to look. You double click on it, go to the properties, and we don't use the extensions. We delete them, or the retracements. Sorry there. The 23, 38, 50, and 61 we delete. We only want the 0, 100, and then the 61 or 161, 261, and 423, and now it looks like this. But that's not good enough for me. I like to change it even a little bit more. So the description, not the level, I put stop loss there, and then a very handy thing I found helps you with my entries when I do lot sizing later is 1, 2, 3, 4, 5 spaces, and then percentage and dollar sign. Right, that I'm going to do with all of them. So I'm going to copy that. Then I go for, there's my entry line, paste. So if you're not following, you can just get the recording and just come back. Double click there, paste. And what I've got then, guys, very, very useful, is very simply my description, stop loss, entry, and I've got the price up there. So when I do lot sizing and I want to enter the price, I've got it there as a guideline. Very, very useful. I can see, let's see if the market continues down here. There's one thing that is absolutely deadly, guys. It takes a while to practice out of your system, but we have to allow the market to make these correction waves. If we get tense and take the trade out, because remember, if it's going, if it's a correction wave, it's taking some of our profit, our open profit anyway. It's taking it, it's busy taking it away. We have to allow these correction waves, even if it's an extended one, even if it takes me out. Over a series of trades, what happens is if you don't allow that and the market moves up, and let's say you get nervous, you've got a fear of losing, your fear of losing is stronger than your respect for the market structure, then you take this trade out, and then the market actually wanted to be very generous, and it keeps on moving, and you miss all that profit. Deadly. Makes it very, very difficult to make a net profit over a series of trades. Can you guys see what I'm seeing? Right. I see a higher top. If it goes past, sorry, a higher bottom. If it goes past that top, then it's a higher top as well, even 1 pip. Then I'm going to move my stop loss to that point there. Right, let's move it. Very valuable, these 1 minute practice sessions. Right, what I've done now is the market is giving me a warning, downtrend, lower tops, lower bottoms. There is a not a lower top, but a higher top. If it continues up past that point, then it is a higher top. There's a higher bottom. If it goes past that point, then it's a higher top as well, and then it's early stage of a next trend. And then I take whatever profit the market is giving me. We respect the structure of the market. It's like the ocean, very supportive environment. If you respect its rules, it's the principles upon which it operates. The market is the same. Very, very supportive. Lots and lots of opportunities, as long as you respect the structure, the language of the market, if you listen to it, the principles upon which it operates. If you don't, if you think you know what's going to happen, then you're going to have a very, very difficult time making a net profit over a series of trades. Right, let's see. I hope I answered your question, Manda. That's the question that comes often. Sorry, Karaba. Theunis said, which is the best indicator for identifying a trend? MetaTrader 5. Right, my personal opinion, Theunis here is the best indicator you can get to identify a trend. Just a normal trend line. Right, there is, you can use a moving average for this. You can just test. I found the 34 simple moving average shows me as well, but it's, let's put it on here while we're waiting for the market to do its thing here, some inside candles. So it's either going to continue and we leave the trade, or it goes up, and then we will engage there. But if it starts piffling here and it becomes a range, then we look for another one. Right, wow, time is flying, but I think we'll catch another one. Right, let's put in the 34 here. The indicators, unfortunately, is all lagging, all of them, a whole lot. I just basically experimented 34 simple moving average, and you can see here, let's just make it a little bit thicker. It follows it very nicely, but it's not as accurate. Right, so I don't like, with the method that I had to make just to guide beginners because they like a method, I use the 34 as sort of like a dynamic trend line here to identify the trend, but as you can see, it's not as accurate. Right, so I hope I answer your question. So any indicator you use should just be to assist you, should not allow you to, or should not take your eye off the structure of the market, right? With these market analysis, I like to stay with the pure, simple market structure. If I draw something in, then it is just a normal trend line, and that's why I practice anyway. And after a while, if you practice this enough, what happens is you don't even need any indicator. But it's a nice, visual effect. Some people choose moving average to as a dynamic trend line. Some people like Bollinger Bands. It shows you the volatility. I don't know. For me personally, it just confuses me. I like to see the structure. That's all I like to see. Right. It's not going lower, so we'll see what happens there. The MACD, the RSI, all those, the oscillators below, momentum even, That's a way to take the noise away. So you see the structure of the market there in an indirect way, also lagging because it's based on indicators, based on moving averages or something, combinations of different indicators. Then it it takes that accuracy, that sharpness away. Right? Can you see what I'm seeing, guys? The market made a lower bottom, a lower top. Try to go there. Let's see that's in the inside candles. Couldn't go lower. So definitely, if it goes up again, higher bottom. If it goes up there, then I'm going to take my profit there, and I'm going to put a new buy order there. Right. Let's select my buy order. Just drag it to the right place. Okay. If it doesn't go, if it just continues down, I let it go. I let it go until I see a structural change. That's what we're looking for. Sometimes the market is very, very generous, guys. Very generous. Sometimes not. That's why you'll see with very experienced traders. I'll show you some of the guys now. We've got some very, very nice, solid guys with good foundations that's trading on our FXTM Invest strategy managers. You can see it on the equity curve. You can see guys don't have these big spikes down. They've got nice, flowing equity curves. So they respect the structure of the market. They stay with this ebb and flow of the market. That's how they are able to do, to make a net profit. Right, let's see if I can find some other interesting questions. There's some people that say they the way I was too quick with my Fibonacci explaining. Yes, you can email me, guys, and then I will send you the guidelines. Right. Right, Tabu, this is a very good question. Please explain how one should distinguish between impulse and corrective waves in order not to confuse the corrective wave with a new impulse wave in the opposite direction. Tabu, definitely takes some practice. I know I talk about this because I've only, I talk about it as if it's simple, but it's easy for me as well because I've practiced it many, many times. Let's see how I'm going to do that. Right. If I draw it in here, it's going to take time, but let's keep this open. Right. Let's say you've got a uptrend going here. In an uptrend, the correction, the impulse waves will be obviously up. It's an uptrend. The corrective waves will be down. And as long as the impulse waves is longer than the correction waves, then we know very clearly that it's a uptrend. But now and then, what happens is there's what we call an extended correction wave. Right, so it goes past that bottom. So we've got our higher top, but now we've got a lower bottom. Right, still an uptrend, but it's halfway to becoming a downtrend. So we've got a lower bottom. Some guys just jump in there. They say no. The moment it goes past that point, that higher bottom there, then it's already a downtrend. But structurally wise, guys, a downtrend is consecutively lower tops and bottoms, right? No, not just a single bottom. That won't work. So as long as the uptrend, the impulse waves are going up, you can see the structure. That first pullback, even if it is an extended correction wave, does not signify early stage of a next trend or a downtrend there. It needs to pull back, and then if it goes past that point, then it's just a continuation of the uptrend. But if it doesn't, and it makes a lower top and it continues down, the moment it continues down, then I want to enter there and I put my stop loss there. Structurally wise, higher tops, higher bottoms. I've got my normal corrective wave or an extended one. The main thing for me is did make a higher top. And now if guys, sometimes it goes there and then it just continues up and the uptrend continues. only and only if that one continues down and it goes past there, do I get out of my previous trade because the structure of change is not an uptrend anymore, and I engage. If this was a nice enough trend, then I engage a short trade here. You can see the market is piffling there. I might consider, because it's already made another lower bottom, I might consider moving my stop loss down to that point there. But I'll only do it once if the market doesn't break through. The 1 minute, notorious for its noise. Let's see what that point is. If it doesn't, if it makes a lower bottom, I'll leave it. Lower bottom there. Right, I hope you guys understand what I'm saying, what I'm illustrating. So in an uptrend, a correction wave, one single correction wave or extended correction wave, it can never be the start of an impulse wave in a downtrend. Even if it sometimes just flashes down, that is just still an extended correction wave there, but obviously it's totally out of proportion. So there you can do nothing there. There was no nice early stage for us to enter. So, but in principle, a trend is consecutively higher tops and bottoms like there, uptrend consecutively lower tops and bottoms like there, and you see it. The guys that get confused with the candles, I let them jump in between so that they can see the structure there. See the structure, take the noise away, take the emotions away. See the higher tops, higher bottoms, higher tops, higher bottoms. Guys that want to measure, they said, oh, that's a lower top there. Guys, that I call that nooks and crannies. It takes a while to practice your eye to see these structures. That's why I like to draw the candles, these trend lines, not inside them, trying to touch it. Just, I want to see this flow, this ebb and flow. Every single trend is unique. The principle stays the same, but it's unique in the way it forms. Right. So Taba, I hope you answered. I hope you answered, and I hope I answered your question. Right. Let's see. Put the emotions on. Man, the market is not full of woman now. I was hoping we could catch another one. Guys, we've got this in our pocket. What I'm going to do is I'm going to move my stop loss down to there, and then we're going to hunt for another one. We've got enough time to catch another one, perhaps. Right, now a very interesting one. I can't see that stop loss of mine, so the way I go and get it now is there's my open trade. I just see what is it there. It's 1.13203, and I can go and change that stop loss of mine. All right. No. Modify. There you can change it. 1.13. What's it now again? 212. Let's make it 212. 212. Right. So there, if the structure changes, the market continues, I'm still letting it run. Guys, we need that profit. If the market wants to be generous, we can't afford to say no. So that's why we respect that. Some guys say, no, but I want my profit now. That small itty-bitty between little profit that you're taking there, if the market really decides to be generous, then it's going to be 10 times that. It might be 10 times that. So rather give the market the last say. If it changes there, then definitely, even though it tried, couldn't, then it's not, but or it's not a downtrend anymore. The reason why I leave it is because there's a potential of the market moving down. I don't manually close it. I used to manually close it, and then and when I check at the end of the day, then I am angry with myself. Right? I'm going to rather take that trade out there. That's not a nice downtrend for me anymore. So if it breaks past, I'm not going to enter another trade. Right? I like to enter out of a, like Prof used to say, the head of our education. I like to enter out of a beautiful uptrend or a beautiful downtrend. I don't want to confuse myself. I haven't got time for that. It just causes a lot of extra mental stress. If you practice, guys, then just like driving a car, it gets easier and easier and easier with the muscle memory that you build. That's why I had another person today again telling me, but Theunis, there's so many exciting things in trading, you know, levels, support and risk levels, um, whatever, you know, what Elliott waves, all these things. Can't we incorporate that? Yes, but later. They all clutter if your foundation is not solid. If you don't respect the market more than all of those stuff, you're always going to respect the market more. If you don't, it becomes very, very difficult to make a net profit in a series over a series of trades. Let's quickly go and hunt another one. Let's see if we can find, there was a potential one, but we missed that one. It's not a very good uptrend there. I'm always buffering there. So I've got a higher top, higher top, higher bottom, higher top, higher bottom, higher top, higher bottom. There changed, very not very defined, and there's not defined as well. Let's go and hunt for another one. All right, how much time have we got left? 10 minutes. I just want to look for another setup, and then I'll answer some more questions. Right, I see a problem here. The spread is too big, so I'm not going to trade this one. You can see there. I don't look at the number, the spread per se. I look at, does it interfere with my structure there? If I need to take a profit there, for instance, then that spread is gonna affect. It's gonna be half. You know, if I take then, and I wonder if I buy there and I sell there, then the spread is gonna cause it to not be what I want it to be. So it's interfering with the structure there. Well, let's delete that one. Let's look for something else. There, the spread is definitely a little better there. We've got a downtrend, broke, missed that one. We are waiting. No, this is a uptrend in progress. Right, nothing for us to do there. Let's see here. Ooh, too much noisiness. Let's look at this one. The spread's also low. No, the market is ranging. Right, you guys will notice that takes me about 2-3 seconds. You know, it's easy to see. Is the early stage of an X trend? Don't make it complicated. Don't put 10 indicators there and they all conflict each other and I don't know what. So the structure is the thing. It's easy to see. This is a ranging market. Not much for us to do there. Right. Haha. Okay, spread is a bit iffy, but we've got an uptrend there. And if it goes down, do you guys agree with me? There's our higher tops and bottoms. There's an extended correction wave. Whoa, 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 whoa. Slow, but slow. Okay, let me get my order in first. All right, let's put it there. I'm gonna just change it a little bit to compensate for the spread. All right, let's get this out of the way. Let's see what's happening with the other trade. The market hasn't taken us out yet, and we'll see what happens there. All right, here we've got an uptrend, higher tops, higher bottoms. It made a try to go up, couldn't turn around. That's our first warning from the market, a lower top. If it goes past there, only if it goes past there, I'm willing to take a calculated risk. Don't know what's going to happen. If it turns around, takes me out, good trade. I respected the market. I will take my profit. I won't skip, try to be greedy. No, the market's going to give me more. We don't know. And if you think you know, you're already in trouble. Right, while we're waiting for that thing to happen, what I can do here, just for interesting sake, is very handy. You get alerts. So I put an alert there. So if the market goes past there and I'm busy focusing on something else, then you know it'll be it will alert me. Right. Okay. I think we've done all those things. Yes, Rose, the recording. Just I'll just before I finish up, I'll show you my email again. And then you can just send me an email and I'll send it to you. Not all the recordings are put on the website, unfortunately. There's not enough space, but they are saved for a couple of months on GoToWebinar. So I'm going to send you that link. All right, interesting here, guys. didn't go, weren't engaged. That happens a lot as well. Other guys thought, the market's going down, they go in and then it reverses. We wait. It's almost like a trap that we set for the market. The market has to confirm both a lower top and a lower bottom, even if it's just 1 pip before I take the risk, right? Okay. How do I adjust the time frame? Time frame settings. So, okay, he's trading on MetaTrader 5. Guys, if you start trading, please start practicing on MetaTrader 4. It's a little bit simpler, same structures, MetaTrader 5. MetaTrader 5's got more options, and that confuses guys. If you start with 4, if you can, if you can trade in 4, you can move to 5 later, but don't bring in unnecessary clutter. That's not necessary. All right. Another couple of questions here. Right. Can you please show me the correct way to move the stop loss? There's 2 ways to move the stop loss. The first is to manually move it. Okay, like I did there, I moved it when I couldn't see it there, so I moved it via the terminal. Right, but if I can see it clearly here, I simply click and drag it up and down. So that's the easiest way to move it. That is one of the reasons why it's very, very important if you have an open trade, please guys, you have to monitor it every 2 or 3 candles to see that possible structure change. If you cannot monitor it every 2 or 3 candles, then either choose a different time frame or don't take the trade. Right, you can't afford to just let it go and then you come back later and the market wanted to give you a lot of profit, turned around in the meantime and it's all the way back up, and you missed not only taking the profit but a possible good entry. We can't afford to do that. We can't be sloppy. You have to be disciplined, accurate, sharp. So right, just my opinion anyway. Right, answered. Right. Ebenezer asks, does this particular method work only on 1 minute? Ebenezer, this is not a method. This is the core basic the core basics of technical analysis. It means we look at this price chart, we study the price. Why? Because we're looking for an early stage of a next trend. I've got no indicators here. If I want to define the structure of the market, I do it with a trend line. So this method, as you call it, or strategy, this is you can use it in any time frame from the monthly to the 1 minute. On every single time frame, there is only 3 things that you will see: uptrends, downtrends, and ranging markets. That is the language of the markets. That's how it speaks. And we are looking for an early stage of the next trend. And we can always see it. You can see it happening before your eyes, like I showed you. Sometimes, like I said, it's not a case of trying to predict. After that calculated risk of ours, that entry is hit, we have got no idea how far it's going to go, no idea if the market's going to be generous or not. If the market is not generous, we protect our account. If the market's generous, we manage that risk, and that enables us to become traders that make a net profit over a series of trades. It's never a case of, have 1 or 2 trades and you're a millionaire. That's gambling. So if you think that's possible, well, go for it. It hasn't worked for me for many years. I thought it was possible as well, and I searched for that holy grail that would only, help me to get into that big waves. We never know when that big waves are going to come. If you trade properly, those big waves gives you a nice bonus, but you can't live off your bonuses alone. You need to manage your risk. That's the first take profit, and you need your salary. That's why I take the second take profit. Then I've already got call it my salary take profit. Then I've already got a net profit in my pocket. Sometimes the market gives me a bonus, sometimes not, but I can survive with my salary. My salary take profit. Hope it made sense. The nice thing, Ebenezer, about this method is that you can use it in any time frame. I know guys that don't like to, they like longer time frames, trade on the 4 hours. You have to monitor every 8 to 12 hours, 2 to 3 candles. I know guys that come after work, they just get down, and look at the 1 minute or the 5 minute, looking for the early stage of the next trend. So you can choose, you can intermix, you can choose. Sometimes I look on the 4 hour and there's the early stage of the next trend, and I go to the 5 minute on that same currency pair, and there's in the opposite direction, early stage of the next trend, like on the 5 minutes. I can take both of them and actually make a net profit on both of them. Right. So that's how powerful the simplicity of this thing is. That's why I made the statement in the beginning saying that I want to show you how simple it is. It's not easy, you have to practice, but it's not that difficult, guys, if you keep it simple. Right. Let's see. My time is almost up. Please, guys, before I go, I think that one is definitely not going to engage. I don't like the look of it. I'm going to cancel that one. Right, let me keep my promise. There's my email, guys. Theunis.kruger@fxtm.com. Send me an email if you want to answer any questions or send me any questions, or you want the link for this this webinar. Right, Karabo asks, am I a full-time trader? Karabo, I did for a time, but in my case, we lost the business and I didn't have a lot of capital. So I started working, and then I started building up very slowly my capital again. And I'm still busy with that. So while I was working first for Liberty as a financial advisor, but I didn't really like that, I started teaching people because I started making a net profit over a series of trades, trading with small parts of my account. So it takes a while to build up your account. It's not this myth about, you just start trading and you make 100 to 200% a month. That's only a myth. There is guys that can do it, but they are absolute masters. They've practiced for thousands of hours or hundreds of hours, so they can consistently do that. Right. But even they will have bad months, well, not bad months, they will have good months and better months, and sometimes not so good months, depending on the generosity of the market. We just stay in the ebb and flow of that. So at this stage, what I'm doing is I'm trading higher time frames, 4 hours before and after work. From 8 to 5, I'm contracted out to do training, and I absolutely love it. So I'm technically speaking not a full-time trader, but I definitely plan to do so in the future again. But I love the training so much that I always mix the teaching. I always mix it in there. It's lovely helping guys to discover this, the simplicity of this thing, and to see them become traders that can actually make a net profit over a series of trades. Right, guys, I think that's that. Hope you enjoyed it, and please don't, even if you put your email in here, I'm not going to remember, but please rather send me an email. When I finish up here, I've got some admin left, and so right. Hope you have a nice time, and see you again. We've got a lot of resources on our website. We've got a lot of webinars coming up, so visit us or come and check in or watch the recorded webinars whenever you can. Try, learn, and grow. Right, guys. Goodbye, and have a good day. Bye.